Today is April 19, 9:48 a.m. And we saw some unusual options on Intel INTC just this morning. You'll see here today it had gapped down. Right now it's at a minus 1%. Earnings is coming up. You'll see here April 27. And so without further ado, let's take a look at those unusual options. So this morning, just I guess about 9 minutes ago at 9:40, so less than 10 minutes ago. So make sure you hit that bell icon if you're subscribed so you can get notified right away when we see these unusual options, because we're going to, sometimes we just report them very quickly to let everybody know. So here, these 1,263 contracts, what are they doing here? Because it's not just 1263. You can also see there is some more of this, because you see here, there's some here, there's some here, this other one here, 316 of them here at 9:39. So it's a little bit more than 1,200 of them. And so when we look at the options chain, you'll see here April 28, we are also in the same position. There was, you'll see here the volume is greater than the open interest. So it is an open order, and they're selling this most likely because of the increase in volatility to collect the most intrinsic value when you sell at the money of 31.5, right? Because we're at 31.4 now. And so what they're doing, it looks like, is because this April 28 is right after earnings. This is an earnings kind of taking advantage of the high volatility, because earnings is April 27. And then they're selling or buying the May 19s. So then they buy the 33 strikes, the May 19s here. You'll see our position is also here. This volume here is actually less than the open interest, so it is possible that this was a closing order. We will monitor this and update everybody if we find out it is a closing order. And so make sure you're subscribed and hit the bell icon. So if there's any changes when we get more data, we'll let everybody know. So let's actually let's kind of like analyze this trade. So you buy one of these and you sell one of these at the money. And so you collect about 29 in credit. And you'll see here, this is a slightly bearish trade. However, it can still go all the way up to 33.1. This is your break even at expiration, and you'll still be profitable. So even though it's at 31.4, it can go up and down as long as it stays below 31. And this is because they're able to sell that volatility to take advantage of it. So it's a bearish trade, but it can still be bullish and go up in price and still be profitable. You'll see here, this is the price. And so because these the strikes are about 1.5 strikes away, it does require 150 buying power per contract here. And so if we when you kind of calculate how many contracts you want to make sure that you have 150 for this buying power. The reason is because this is selling a call spread here, but at different dates. That's why it's a diagonal. And so you'll see here on the Greeks, it's actually a positive theta, which is very good for our trade. They may even take this trade off right before earnings because it could hit their profit target already. Of maybe they have a 50% profit target they want to hit. Right? And so volatility is positive, which is good because it will increase as we head into earnings. And so their delta is negative. They don't necessarily think it will go up much more during this short 9 days before earnings. unless earnings surprises, right? That anything could happen during earnings. And so it's a trade that could possibly be taken off right before earnings, and just taking advantage of the nice volatility that is giving. And so let's see, what's today's volatility at? We're at 40%, so that's a good percentage to sell volatility. And so even though there's more calls today, don't mistaken that as meaning that they're bullish on it. Okay, you always have to deep dive down to the analysis to understand what does that mean, because they're selling the call spread. So that's actually not very bullish. It's more like moderately bearish. So keep that in mind. That's 316 there. We can kind of calculate that buying power they use. 316 of them this morning. So it's about that much. And since it's 150 buying power for each of these contracts they put on, so that's a total about $236,000 they had put onto this trade. So keep that in mind too. It's a pretty large trade. Not massive like in the millions, but it is quite a amount of money in just 9 days. So keep in mind that earnings is coming up. All right. And so if this was very helpful, please smash that like button. Helps us keep making these videos for everyone that is subscribed and notified with the bell icon. Okay, take care, everybody, and good luck.